Okay, hello everybody and welcome to this tutorial on how I use the short-term fractal with value area. And it's not going to be about how the fractals are constructed or what it is, maybe just some basic information, but it's for another video. So in this one I just wanted to show you how I propose to use it, how I backtested it, and what is my idea on the logic behind transactions with these tools. So first of all, you choose your instrument. We'll go through a few other ones, but this one is NQ, and basically you can use it on any instrument that you want. And for this particular one, I use it on 1 minute chart, and it's best to use it on futures, like the TradingView futures. CME futures are like $4 a month, so it's pretty cheap. And what you want to do is just set up your 1 minute chart, go to indicators, invite only scripts, and you will find here your Emini.Today daily value. So this is actually a really simple script. You don't really need like a TradingView for that. You can use whatever platform you want, because it should show the same thing, and it's basically yesterday's volume profile value area. So you have value area high and value area low, and this thin line here is VPOC, so volume point of control. But in this particular strategy, I'm not using it at all. Just the value area high and value area low. And just bear in mind, this is yesterday's value, so it's not changing during a present day. So this is the first indicator to this short-term strategy, and the way I use it is it just gives me, first of all, it gives me a hint of the direction where I want to trade, in which direction. And it's pretty simple because you can have actually just 3 scenarios. Price can either close inside of the value or close outside of the value. And I'm talking about close because in this particular strategy, the close is the most important one. So here you can see I am on a New York time, and at 18 p.m. We have a session reset, like the new session starts after the RTH close, and from there the value area is shown. So this value area is actually belongs to this day, and what I want to know exactly, what was the close at 18 in relation to value area, right? So in this case, NQ closed inside of the value area, right? It may close outside of the value area, or exactly, or just a couple ticks shy of either high or low value. So if we look to yesterday, the close was outside, below the value area, right? Because at 18 we can see that price is quite a distance from the value area. And the second thing that I want to know is if the previous day was an up day or a down day, right? So the way to gauge it is, simply take open and close and see if, like, a daily bar, if it was rising or falling. So in this particular day, we have a red day. So this was open, this is a close. So the first thing we want to know is that this was a down day. The other piece of information that I want to know is, again, where was the close in relation to this value area, right? So one thing, we have a down day, and two, the close is below value, right? This value here. So what that means is, in this case, I want to look for shorts. If market closes, let's find an example, the opposite example. Oh yeah, this is this one. All right, so this is the opposite example. The market went up and closed above the area, the value area, right? Above the value area high. So in this case, I want to look for longs, right? And this is like simple, really simple approach to value area. Now, this is not the only case possible, because there is another possible outcome on the session. So let's say here, we have a down day, but the close is like, it is below. So close is below the below value area, right? This value area. So we want to look for shorts, right? Let's find the second, right? So this is, as you can see, the down day. It's it's not like a huge down day, but as you can see, we closed inside of the value area, right? We closed inside of it. So in this case, after a down day, if we close inside of a value area, I am looking to go long, right? So in this case, the day was a red candle. It was the red daily candle, right? And we closed inside of a value area. So I want to look for longs, right? Okay, let's find some other. All right, this is also the opposite example. So we had an up day, right? We have an up day, and we close inside. So we are looking, right? We close inside of this value area. So I'm looking to go short. This is just a general, indication for me where I want to, the direction I want to take in this setup. Over here, like, this was a down day, right? And we closed again inside of value, right? And what I want to do is look, at some point I want to look to go long, right? And this is these are all the possibilities beside one more. Let's find one more which I wanted to show you. It's when close is like almost identical to either value or area high or low. I can't find it, but I don't know. but I hope you get the picture, like when it closes almost exactly or exactly on VAH or VA low. Oh, all right, never mind. But you get the picture. So this is like the first, just like the first thing that I want to know. Did we have an up day or a down day, and where was the close? If the close is outside of the value area, then I want to go in the same direction as the previous day, right? If we are inside, if we close inside of value area, I want to go against the previous day's trend or a previous day's direction. Now the question is where to enter the trade, because this is not something that is like straightforward, and you can simply use profile and gauge some level and go with the direction that you choose. So for that, I will use the short-term fractal. And so let's put on the short-term fractal, Emini.Today, short-term fractal. Okay. So let's take the yesterdays. So again, I will mark the indication. So we had a down day, and we closed below value area, like outside of it. So we want to go with this direction. We somewhere at some point during this day, we want to find the short entry. Okay, and there are two ways to do it with a short-term fractal. And in this video, I will tell you about like the perfect setup. The perfect setup is the setup where all the parts of it are in place and in ideal conditions. And what are these ideal conditions? Well, so we know that this day we want to go short, right? So that's what we know before we even load the short-term fractal. Now, how do we find the best opportunity in this perfect setup? So the opportunity comes if, first of all, if we get inside of the value, if we trace inside of the value or even outside of the value, like here, and our fractal is going to look like, let me erase these. Okay, so I will hide daily value for a moment. So this is our day from fractal study perspective, and I want you to notice one thing here. Let me turn off everything besides these boxes. These boxes are actually fractals. Lines are just extensions, or it just shows a potential range of price deviation, right? But if you notice here, some fractals are getting smaller, like here, right? So the range between these two boxes, these two zones, they got smaller than the one which was previously printed here, right? So this, let's call it a fractal. This fractal was larger than this one. And it's obvious that it's because of volatility in time, and this study calculates some distance of time, and it checks the what was the historical volatility, and it basically works like for example Bollinger Bands, like the larger amount of time the price is contracting, is going sideways, the distance between the bands is going to shrink. And that's exactly the same idea here. Once the price breakouts of this fractal here, it will it will get bigger, the spread between support and resistance. And this is basically how this is basically the logic, part of the logic behind how this is being calculated. It is based on some historical deviations of the price and its volatility. But then the second part, the most tricky part for me when I was creating it is which levels you actually want the fractal to be at, because it could just grow exponentially or in some kind of a linear way. And of course you can see that we have like repeating levels here, right? So it's like almost a repetition, then it shifts and changes. But let's get back to the strategy. So the first thing you want to see when the price is getting back to the value area, let's see again, where's the value area, right? So we have a value area here, from here to in this range. So the first thing you want to see is you want to see a fractal, so this large box, this large red box, because we're going to short the market. You want to see it inside of the value, but not like this, like here. It's not like it's not like 100% inside. You don't want it touching or being a bit below, or you want to see it inside or totally outside, or you want to see it inside of value area. Okay, that's the first thing that for the perfect setup there has to happen. And the other thing is that this fractal here, which you're going to use, has to be larger than the one before. It's because you need expanding volatility to trade it, because in expanding volatility you have the probability of a mean reversion is higher than when it's contracting and you might have a breakout, right? So once you see that the fractal, the red fractal for shorts, is inside of the value or even outside of it, and the present fractal that you want to trade off is larger than the previous one, which means that the volatility is expanding and the mean reversion is more likely, you want to trade it. And the way you want to trade it is for a perfect entry, you don't want to get in as soon as it just goes into the red zone. You want to wait for the price to have a bit of extension. And let's okay, so this is the extreme overbought, right? This here, and the shorts, the stop loss for this short is somewhere above the, like few ticks above it or something like that. Not at this level. Just put it somewhere a bit above it, right? And where do you enter? You don't enter you don't want to enter exactly on this red line, because many times price is not gonna get exactly to this point. Sometimes it will, but I think more times it will it'd be shy, a few ticks shy from your level. You want to get in a middle between the outer range of bearish fractal and this extreme overbought. So your entry is at the half point somewhere here, right? And your stop loss is like somewhere here, right? Like like a half point, half the distance of it above or something like that. Now what about the targets for this kind of trade? Well, the target is pretty simple. So you want to that depends really on your style or what is more preferable to you. Like, I like to scale out. Some people don't. Some people want to just take money and get out. So the targets are pretty natural. Like, if you're entering in this fractal here, and you are, then the opposite side of this fractal is here, right, at this green zone. So this is your target. Or if there will be any fractal in between, like on the way down, you can like scale out at the first fractal, then put your short position into break even, and you can wait with the runners to hit the other side of the fractal. So the thing that you are that I'm referring to, that I'm referring to is what is it, expanding right style, extend right. So this is the fractal that you are trading, right? This one here. So you entered here. This is your like target zone, right? This is your target. Now the other situation is overbought. I don't want to see it. Okay, this one. So the other situation will be, let's hide it, put the value, is when you are going against the trend of previous day, right? So in this case, close needs to be inside of the value. And right, this is a good example that it probably is, there will be some problems with this trade. So we have a down day. So like, I'm not cherry picking this, it's the day before. So we had a down day and the price closed inside the value area. So we will be looking for longs, right? So we know that at this point we wanna go long. This day we want to go long. So let's turn on the fractal and see how it played out. So the things that you want to see if you're trading against the previous day's trend. So the first thing is you want to trade outside of this value area. So you want to have this fractal be outside of it. And as you can see, this fractal, so this green box, is outside of this value area, right? And this could be your entry here at the green line, at the green light, right? But this would not be a perfect setup. Why? Because look at this fractal is smaller than the one previously, so the volatility is contracting, which means you might get the volatility breakout, the price is not is not tamed by expanding volatility, and this is not like a perfect setup. But again, there's nothing wrong in taking this trade with a small stop below and even scalping this or whatever, right? Now, very important thing here is that you will notice, let's turn off the value, you will see it better, that this fractal here, now don't be confused. Now, this is not larger fractal when you compare it to this one. As you can see, this fractal here is actually, the same as this one, exactly the same, right? You can eyeball this, that this is the same size of the fractal. It just moved lower, but it's not expanding, right? This one here, this one is shrinking, right? So this one is we have a contraction of the volatility, right? So we definitely don't want to take it here, although as you can see, it worked really nicely again. So again, this is not a bad trade, it's just not the perfect setup, right? And this one here is actually expanding because it's larger than the previous one, right? So this one is expanding, and you're gonna see the trade opportunity right when the market opened. Okay, but here's the thing which I would really like you to consider, that this trade, like the best opportunity for this trade is before the market opens. The way you trade it after the market opens is a bit different. You can still trade it. Again, you can still take these trades, and there's nothing wrong in trading these trades after the session opens. But I will do the second video of how to deal with some situations after the market opens. But again, you had some opportunities like this one, even though it was contracting, so it's just not the perfect setup. This was almost the perfect setup here, or you just took a small loss here, or managed to scalp this for almost 200. It's 200 NQ points, and you actually traded long on a down day. So it's not that bad, and you actually located your trades pretty nicely at the at the correct levels, like here. You see the green light, the green line here. Well, this one was a bit extended, but it's almost market closed, and I don't recommend trading it at the market close. It's because when the US session starts, the previous day's value and profile starts to change. I mean, the present day one start to change rapidly, and you have to take into consideration the present day's developing profile. You cannot simply rely on just on yesterday's profile. So before the session starts, it has much more sense to use previous day's profile, and you don't really have to look at the profile which is developed during the overnight, right? Because the volumes are not there usually. The price action is tamed or directly related to previous day's profile more than the one which is developing presently. And so this is just my suggestion. It's not like you can't trade it, because you will make money with this one, at least how in the way I tested it. It will just it won't just have you won't have this amount of accurate trades, but it will work. At least historically, it works. So let's find some other example. Let me see. This one was, this one was like a top of. You had an up day, right? But price closed inside of the value, right? So you're looking for short, and here you have expanding. Let's zoom it in. You have expanding fractal here, so the volatility expands, and so this is your first trade here, and you would be like stop break even here, and you could, and this is the other thing that I want to tell you, that you can re-enter the trade when the other fractal occurs here. So this is the next fractal, and it's even larger than the one before. Remember, the more fractals one after another expands, there is more probability of market to reverse. So there is more probability for the reversion, especially if you're using some kind of a order flow logic here, like even that simple one with the profile, with the value area, right? And one thing that I need to zoom it out. One thing that is important here, it doesn't matter if this is the index futures, it doesn't matter if this is gold or CL. The only thing I'd recommend is using the futures data to get a good value area. So the way I look at it is I have the 4 major indexes: the S&P, NASDAQ, YM, and Russell. And basically by looking at all of these 3 indexes, it's much easier to gauge, at least to me, from this perspective, what's going on. And of course there is this discretionary part, like in I don't know, let's find some example. yeah, this one's good. Like this is the same day where the NQ had was tough because you were trading against the trend, right? And I think so. So look at this day. You had a up day, right? But the price closed inside of the value, right? So you want to trade against this this trend, right? And once price broken out and then got back, you know, look at where it got back, right? So you have a fractal inside of the value here, and here's your entry or stop loss, or somewhere here, your stop loss somewhere here. And one thing I should mention it in the second video, but I will give you a hint. What happens after the U.S. market opens? They will usually, if this trade is happening before U.S. session opens, and it usually does, notice what happens after U.S. opens. It usually will get to these levels where you entered, or sometimes a bit even further. And usually this is like a great setup for another trade in the same direction. Let me find, maybe I can find the another example of that. Okay, so here you have the down day, but the price closes inside of the value. So you're looking to go long, right? And here, as you can see, oh no, this is not the one I was talking about. But it's a good setup. Like so this is the fractal, which is outside of value, right? It's outside of the value. It almost hits the the entry level, right? And it's a larger one, so it's expanding if you're comparing to the one before, right? Because it's larger, so you have almost a perfect setup. Again, if you want to trade perfect setups, then you probably need to watch more markets. So at least 4 of these indexes, maybe gold, CL, to get the perfect one. But if you're going to trade things like this, that you will scale in when price gets into the green zone and then add 1 or 2 on the way down, then you will probably have much more trades. But still, these are high quality, in my opinion. These are really good high quality setups. And again, this is simple volume profile analysis, but with this twist of pointing the entry level exactly with your stops and your targets. So basically you can do it like, I don't know, let's take a CL. Let's see today on CL. Oh, great. This is ideal example of what happens if a price closes exactly at the value. You see, it's almost to the tick at the value. And at this point, I'm not trading this. Okay, this is something that I'm not gonna trade. I want to see price close either outside or inside. So that's a good example of the day where I'm not gonna trade it. Let's see if we had yeah, this was a down day, right? You have a down day, and the close, remember, close, not the open, because you can have on Sunday, you might have a gap and it will open inside, but you want to know the close. So the close was outside of the value. We had a down day, so you want to trade down. You want to go short, and so this is your selling zone, right? Because we have a fractal is inside of the value. You have your selling zone. Above here is stop. Here you can add. One thing which is missing is this fractal is not larger than the one before. It just moved higher, but it's not the larger one, right? So again, this is not the perfect setup, but it's tradable. Like you can trade it. Yeah, this one's cool. So you have your down day. Your value area is here. We closed. Below it, you're looking for short entry. But why we don't want to enter at this fractal? Well, because it's not inside of value, right? Again, you can scalp here because price will react on it, but it's not it's not a perfect setup. The perfect one would be right here, right? That would be a perfect entry, where you could just start entering from here, 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 and this would be somewhere here would be a stop. So we didn't get to that point here. Let's see, I don't know, gold. Gold today. Okay, this is nice setup. So we had it's actually no. So we had a up move, and the price closed inside of this value. So we are looking to short, and the fractal you want to see is outside of this value area. So this one, it is outside, and you want to see volatility expanding. So this fractal needs to be larger than the one before, and the one before is here, so it was smaller one, right? So this is your short area. Like the perfect entry is here. You can go this is the red zone. This is where you want to start shorting this, but again, it's not a perfect setup. So I'm showing you the perfect one and the one which will give you more trades, but they will be a bit less precise, but basically the rules are the same. The only difference is you're not getting the perfect price, but you're not gonna get it every time. Right? Again, let's look at this on gold. You have the up move on the session before, and the price closed outside of the value area. So you want to look for longs, right? You want to look for longs, and you have your first fractal inside of the value, right? The whole of it is inside of it, and it even got to a perfect spot right here, right? So that's your perfect spot, and your stop loss is like it's like here, somewhere like here, right? And and you go long here, right? And the one thing that I mentioned before, look what happened after US Open. It went back and retested the same same area, and it bounced back, right? The next opportunity. Okay, so this is how I look at it. You will probably have some questions and hit me up, and I'll try to help. But basically, the reason that I'm publishing these studies on TradingView is that I know that a lot of people is not using like Sierra Chart or NinjaTrader or something like that. This is more like a common platform, and I hope that even if you don't have the all this professional, I don't know if you can say this, order flow software, you can still view it on a trading view, even on your cell phone. Like, I love that these things are on a that you can actually take a look at the at your phone and see if there's anything interesting going on. So yeah, so this is the first video, and in the second part, I don't know, it's probably coming next week, because I'm pretty tired after coding and releasing these, and I need some rest. But there's coming the second part of the video, and you probably it is easy to figure out that it's going to be related to times, to session times. You actually see I have this indicator which shows me session times, and these are some important session parts which I'm gauging the sentiment for the next part of it. So, but it's gonna come in the next video. So yeah, that's it. Take care, and you know where to catch me, so have a good one.